Welcome back to Opennup. In the last video, we discussed on India's record-breaking inflation drop. Today, we are going to talk about, will it be a reignite growth or spark trouble? If RBI go for rate cut. India's retail inflation dropped sharply to 2.1% in June 2025, its lowest in over 6 years. With inflation far below the Reserve Bank of India's midline target of 4%, RBI Governor Sanjay Malhotra has hinted at a potential 25 basis point rate cut later this year. But the big question is, will this be a booster shot for the economy or open the door to new risks? A rate cut would immediately reduce borrowing costs. That means cheaper home loans, car loans, and lower interest rates for businesses, especially MSMEs, which are struggling with weak demand. For many middle-class families, that translates to reduced EMIs and improved cash flow. Sectors like real estate, where sales dropped nearly 20% in Q1, and automotive, which hit an 18-month sales low, might finally see momentum. A rate cut could help bring back hesitant buyers and unlock stalled investments in housing and infrastructure. Investors are also watching closely. Lower rates generally boost market sentiment. With more liquidity and cheaper access to capital, stock indices like Sensex and Nifty could rise, particularly in banking, construction, and finance sectors. But not everyone gains. Fixed deposit rates will drop, affecting savers, retirees, and pensioners. Many will be forced to shift money into higher-risk investments, chasing better returns. Meanwhile, core inflation, excluding food and fuel, still hovers around 4.4%. If RBI cuts too soon, it could spark inflation again. And too much liquidity risks asset bubbles, especially in stocks and property. That's all with this discussion. We will also discuss on the other side of the situation. If RBI likely do not go for rate cut, we'll be back with more such topics to discuss. Till then, stay tuned with Open Up.